Hi, this is PR Sundar. Welcome to Dalal Street Week Ahead program sponsored by Delta.exchange. I went to Switzerland for holidays for about 3 weeks. So that's why the last 3 weeks I could not post any videos. Hope from today I will be posting my videos regularly. So that's one thing. Second thing, I'm having a workshop next Saturday, Sunday in Chennai. The workshop is full. So in fact, this is the first time my workshop is full 2 weeks before the starting date. Because of this, so I immediately launched another workshop in Bengaluru, so next month. So if you're interested, you can check the description. You can subscribe for the workshop. And number three, today I'm attending some event organized by Money Control. So that's why this all this coat and suit, everything. I'm just rushing there after this video. Right. Now, coming back to the markets. Now, first the long term, then short term. So we talk about a long term a little bit. So in long term, I've been maintaining for the last few months that this market is not going to beat FD return for the next few years. And today it is September 28, and then last Friday it was September 26. And last year, September 27 was the day the Nifty hit a fresh all-time high, 26,277. So that was the all-time high reached last September. Then from October, so FII selling has started. I think from that day till now, FIIs have probably sold like more than 3-4 lakh crores. Since last year January, they have sold 5 lakh crore. Since last September 27 until now, the Nifty is down by more than 6%. The Indian rupee depreciated by more than 6%. So FIIs, instead of bringing the money to India and investing here, had they put their money in fixed deposit in the US itself, they would have got about 5 to 6% interest because the interest rates were so high last year. Even now, there are many banks offering 5% interest rate for US dollar deposits. So they have lost 6+% in market, 6+% in currency depreciation, and 5-6% notional loss from the interest, opportunity loss. So if you put together everything, they are down by 18 to 20% loss in the last 1 year. So that explains the reason why FIIs keep selling. That's number one. Number two, another big problem for India, the big headache, is the Trump policies. The Trump, is showing that he's very, very crazy. And, somehow people now started thinking that he is all out to destroy India. And he is conspiring against India. Otherwise, how would you explain what happened over the last weekend? On Friday evening, so he stated that all the H1B holders will have to pay $1 lakh to US government every year. It is not one-time payment every year. Then, if any H1B holder has gone out of US, like they cannot re-enter US unless they pay $1 lakh. That was a very, very big blow. But then Saturday evening, he changes the story totally. He said, this rule does not apply to the existing H1B visa holders. And also, the $1 lakh is one-time payment. It's not a every year payment. Remember, 71% of the people who are holding the H1B visa are Indians. So definitely this measure is totally going against India. Also, why they have to change the story in just one day? So which means that, the intention is to show that, how much damage he can do it. Luckily, he had reversed it on Saturday evening itself. If he had waited until Monday evening, then Monday definitely our market would have crashed even bigger. So, like when US is totally standing against us, and then, FIIs keep on selling, and then, plus together, with all the internal issues. So I don't think that Nifty is going to give any better return than FD return over the next few years. And that's my long-term view. Of course, this video is not about the long-term view. This video is about the short-term video, short-term prospectus for about next 1 week. Now, looking at the short-term, last week, if I have to explain the market action in just one word, it is treacherous. Market was falling every day, right? So previous week, Nifty had shown technically long. Then every day market started falling, and then every day Nifty fell about 100 to 200 points for 5 straight days in last week. But in totality, you see, Nifty was down for 6 straight days, and then 7 straight days there were red candles. That means the very first day, the 7th day, right? It opened higher than the previous close, but closed below the opening level. So therefore, although the Nifty closed higher than the previous day, but no opening and closing was lower than opening. So because of that, the red candle formed. So 7 straight red candle. When this has happened earlier, so it has happened only in February at the peak of the US tariff news. But that time, the entire world crashed. But now, it's only our market alone, it has been falling like anything. So, clearly, short-term markets are bearish. And now, technically also, the Nifty is, short only. So, Nifty becomes long only if 25,000 is taken out on the higher side. So, that's the last 1 week price action. Now, coming back to the next week. So, next week, Thursday is a holiday. So, we have only 4 trading sessions. Tuesday is the Nifty weekly and monthly expiry. Wednesday is the Sensex expiry. So, usually expiry days are, tend to be more volatile. So, therefore, markets tend to be, will be volatile only for the next 4 trading sessions. If you look at the open interest, looks like 24,800 is going to be difficult for this expiry. That is for Tuesday, not for Friday. So, if you look at the put-call ratio stands at 0.53, which is extremely oversold. So, put-call ratio below 0.7 is already oversold. Now, it is extremely oversold. But one good news is that on Friday night, the GIFT Nifty closed 60-70 point higher. So, if any big gap up, there may be some kind of a short covering that may take Nifty towards 24,800. But otherwise, the big resistance is at 25,000. And so, in a way, I would say, for coming to Tuesday, 24,800 may be the cap. For next Friday, the cap may be 25,000. Now, what are the other important events? So, the most important event is the RBI policy, which is on Wednesday. But most probably, this RBI policy may be a non-event. Nobody is expecting any rate cut or nobody is expecting any rate hike also. So, 99% it's going to be a status quo. So, why there can be no rate cut despite US is cutting the rate, but our currency is depreciating like anything. So, if they reduce the interest rate further, so the currency will come under more pressure. So, therefore, the possibility of rate cut is very, very, very remote. So, overall market, the trend is down. Market may be trading between 24,500 and 25,000 for the next 2 trading sessions. Maybe up to Friday, Nifty may trade between 24,500 and 25,000. So, keep watching for the sectors that will be affected by the US tariff issue. IT stocks are doing really, really very, very bad. Look at the TCS. Just few months before it went up to 4,500, now it has come to 2,900. So that's almost 35% fall. Right? So they're all like, thanks to Trump only. Short sellers are really thanking Trump nowadays because they are aggressively shorting and making profit for the last 7 to 8 trading sessions. So that's it for now. Hope you enjoyed watching this video. Thank you for watching.